Another dynamic withdrawal strategy that I do like to think about is going to be from a tax perspective, where we're thinking if I have required minimum distributions and I have ordinary income tax, is there a way that I can dynamically withdraw my money from a tax perspective? So I don't just take the money out of my 401k and then out of my investment accounts and everything equally. I strategically choose the order that gives me the most money at the end of retirement. And sometimes that means we do Roth conversions where we live some early years only on our tax deferred account. So that way I can do the conversion, give myself tax free income in retirement, and then I can spend some of that a little bit later. I can start as early as 50 while I'm still working. I can start at 55. I mean, there's so many ways that we can do it. But you can see in this particular case, what we're able to do by doing these Roth conversions, and we set the Roth conversions basically anytime their taxes were below 10% as their ordinary income, we went ahead and did Roth conversions to bring them back up to 10%. And so what happens is sometimes as you retire, your income takes a hit. And if your income is lower, you're thinking, all right, well, I have a 5% tax rate this year. I have a 0% tax rate this year. I have a tax refund this year. But instead, if you just said, well, I've been paying 10% every year, maybe I just maintain that 10%, or maybe I maintain that 20%, and then I do my Roth conversions. Now in retirement, I have tax-free income. And my retirement withdrawal strategy is much better. I don't have to worry as much about going aggressive because I already at a minimum have an amount where I don't have to cover the taxes. And so that ends up working very well for a variety of people. And so for this particular case, you can see that doing those Roth conversions, we're able to generate an extra $1.1 million in their ending balance in their account. We're able to save them about $200,000 in taxes. And because they didn't have those required minimum distributions requiring them to take out large amounts of money later in retirement, they were actually able to leave about $1 million more in their tax deferred accounts. So that way they're able to save on taxes, have more generational wealth, and that's what the plan was. But at least you have the flexibility of choosing when and how to spend your money. They were able to get all of those benefits simply by doing the Roth conversions early on.